Welcome to S&P Capital IQ's European loan market video overview detailing leveraged finance trends and activity during October 2012. I'm Suchit Gupta, a member of S&P Capital IQ's Leverage Commentary and Data Team, a unit of S&P that is not affiliated with S&P Ratings. For the next few minutes, I'll walk you through a review of recent loan and high-yield bond market trends in Europe before winding up with themes to watch for in November and early December 2012. Before we start, please know you can follow LCD on Twitter, Facebook, and can join the almost 9,500 contacts in LCD's Leveraged Loan Group on LinkedIn, as well as leveragedloan.com, a free website promoting the asset class. The links to our new website and to follow LCD on LCD's social channels are in the info section on our YouTube channel. You can also download the slides for this video at slideshare.net. In October, loan issuance shot up to 3.7 billion euros from 2.3 billion euros in September. High-yield issuance came down to 3.5 billion euros from 7.2 billion euros seen in September. According to JP Morgan High Yield Research, positive fund flows for the 18th straight week into high-yield accounts, totaling an estimated 664 million for October 2012. This brings the year-to-date number to almost 4.6 billion euros. Secondary markets are up. Loan markets went up 60 bips to finish the month at 96.35, while high-yield markets are up 125 bips to finish the month at 99.97. The S&P European Leveraged Loan Index, the LE, finished the month up positive 0.47%. This is till the end of October 25th. Default rates stabilized during the month. Focusing on the secondary loan market, this chart details the average price of LCD's European Loan Flow Name Composite, a measure of the 12 largest, most liquid loans consisting of 10 issuers since 2002. Secondary loan prices rose 60 bips to finish the month at 96.35. This next chart details the average price of LCD's European High Yield Flow Name Composite, a measure of the 12 most liquid high yield issues since the beginning of the year 2010. The high yield market finished the month up 125 bips at 99.97. This chart details the monthly return of the LE, a broad measure of European loan market returns that LCD calculates. All returns are ex-currency unless otherwise stated. The European loan market had a positive return of 0.47% for the month of October. This is up till the week ending October 25th, down from 0.63% for all of September 2012. The total LE return for the first 10 months of 2012 is a positive 7.84% versus 0.71% for the same period last year. Now we turn from the secondary to the primary. This graph details new issue volume for both leveraged loans and high-yield bonds. October saw European monthly loan volume jump up to 3.7 billion euros from 10 transactions. This is a 5-month high since each of the preceding 4 months saw less than 3 billion euros and between 7 and 8 transactions. Year-to-date new issuance for loans through the end of October is 24.2 billion euros, down 43% from the same time last year. European borrowers took advantage of excess liquidity sloshing around the continent's loan market to launch a mixture of refinancings, repricings, and recapitalizations, including those for RAC, Igloo Birdseye, and IMS Health. The high-yield bond market lost some of its September fire as only 3.5 billion euros of paper priced based on 10 bonds, about half of the 7.2 billion and 19 bonds priced in September. Nonetheless, the year-on-year gap with 2011 has declined to just 11% as of October 31st, with this year's tally at 30.5 billion compared to last year's at 34.5 billion. The default rate by principal amount moved up to 6.3% at the end of October 2012, up from 6.2% at the end of September 2012. Meanwhile, the default rate by issuer count stabilized at 8% at the end of October 2012. Themes to watch for going forward: no significant changes to the quantitative easing policies from the ECB. Expect more inflows into high-yield bond funds on the back of stability in the secondary markets. There's an extremely short window of opportunity for new deals to come out and get priced before the end of the year. A to E will continue as issuers seek to address their maturity concerns. Bond for loan takeouts as stability returns to the high-yield markets. Peripheral issuers, i.e. issuers from the Eurozone peripheral countries, will continue to seek out to access the high-yield markets. At the same time, European issuers are increasingly going across the pond to the U.S. to issue loans and bonds, given the greater depth and liquidity in the U.S. markets. Given the strong technical demand for loans and the dearth of new M&A currently, sponsors will look to tap into this demand for recapitalizations and, if possible, further repricings. However, sell-side bankers and sponsors are optimistic about M&A activity during the first quarter of 2013 and expect a few deals to come to market by then. That brings us to the end of our overview. I hope you found it informative. We'll update the analysis each month and plan to have analysis of other specific European market segments going forward. Check out LCD's YouTube page for other video analysis of the leveraged finance market, including U.S. loan market wrap-ups. The link to the page is in the description for this video. For more information on LCD news or research in Europe, you can contact Anna Chini. You can email her by clicking on the link in the info box. Thanks very much. We'll see you soon.